Hello everyone, PS from PS Invest Plays here today. E-commerce and cybersecurity companies had done extremely well in 2020, but not so much in 2021. Is this trend going to continue? Or we can expect a higher price movement in 2021 and in future? In today's video, we're going to look at two stocks in e-commerce and cybersecurity industries where we'll understand their business, their financials, and review their charts using Elliot wave theory and see how we can make money. So stick around. I think you'll like what I have in store for you today. The first one on our list is Etsy, an e-commerce company, ticker ETSY. Etsy is a global marketplace for unique and creative goods. And I believe this is exactly what makes it stand apart from other e-commerce businesses. In a survey of customers who use Etsy's platform, 88% said the company offers items that are not found elsewhere. Customization is also a strong competitive edge as it allows buyers to search for or create something extra special. Popular influencers also market their unique collections on Etsy's platform, driving strong engagement with customers. These collections span a wide range of items from apparel and accessories to home and living. 2020 was a solid year for Etsy as revenue doubled to $1.73 billion, with gross merchandise value GMV reaching $10.28 billion. On the bottom line, net income surged 264% year over year as the company kept a lid on product development and administrative expenses. This momentum has carried into the first quarter with GMV and revenue up 132% and 142% year over year, respectively. Profitability remained elevated too, though this was the final quarter before reopening comparisons. Recently, Etsy acquired Depop. The acquisition gets Etsy into two exciting new areas where Depop is a play on Gen Z shoppers and second-hand sales market. As of right now, the plan is to continue to operate Depop as its own standalone marketplace. One can think of Depop as a giant international flea market in app form that uses influencer-based approach to sell second-hand clothing online. Depop's approach can also be called social commerce, where Depop encourages their sellers to build their brand on platforms like TikTok, Instagram, and YouTube. Depop's approach has Gen Z hooked as Depop is the 10th most visited shopping site for the Gen Z consumer in the US. 90% of Depop users are under 26, which is an attractive segment of buyers for retailers. With the Depop acquisition, Etsy seems to be evolving into a home of multiple e-commerce brands that cater to different audiences. The Depop acquisition comes on the back of the Reverb acquisition that took place in 2019. Reverb is a marketplace for new and used musical instruments and equipment. It is also the largest online marketplace dedicated to buying and selling new, used, and vintage musical instruments. Etsy released its Q1 earning results on May 5th, 2021, and the results were excellent. Etsy beat estimates on both the top and bottom lines, but moving forward, Etsy projected slowing growth for both revenue and GMV sales or GMS, which disappointed investors. Now, what are the future risks for Etsy? As the 2020 closures wind down, there are fears that both the seller and the buyer side of Etsy's market might weaken and slow growth. I expect that this risk will only be short term. However, as I think Etsy should maintain a majority of the gains made in 2020. Etsy's ability to attract sellers is crucial for the success of their business. And anything making the business less attractive for sellers can hurt the business long term. If Etsy focuses more on growth and less on selling handmade and artisan goods, there is a danger that customers notice the potential shift of Etsy from its original values. And it could cause the company to lose its differentiation and cause those customers to shop elsewhere. Those smaller sellers do have other places where they can sell their wares too. Amazon has started their own handcrafted goods section, and Pinterest is ramping up its e commerce ambitions. An additional risk is Etsy's international expansion efforts. Etsy has been expanding outside the USA since 2005, but that growth is not without risk. The expansion in markets outside the United States often requires significant financial investment without guarantees of financial success. As most areas of the world already have developed powerful e commerce marketplace competitors that could provide significant competition to Etsy. The revenue, gross profit, EBITDA, net income are extremely good for Etsy. Etsy is trading at a forward price to earnings ratio of 47. This may seem lofty at first sight, but it represents a sizable discount to the 75 time earnings the stock reached after the release of its full 2020 results. The fears over slowing growth due to 2020 closures subsiding should only be a short term event. You should use the current dip in Etsy stock to either initiate a position or add to a position. Etsy is a buy for growth investors. This is also indicative in the technical review, where I see slight short term price decline but excellent gains long term. On the chart, Etsy has completed its first bull wave and is currently in the corrective phase, where I see support around $157 and resistance around $128. This to me is a buy zone. And this short term correction should get over in the next 1 to 2 months. And after that, Etsy should go in its bull wave, which should take the price to approximately $403, giving us a 160% upside potential in the next 5 to 6 years. If you like this video, don't forget to subscribe, hit the like button, and share this video with your friends and family. Crowdstrike, ticker CRWD. The ransomware epidemic is becoming a way larger problem for the US government than we were previously expecting. Ever since the news of the Colonial Pipeline hack, more and more ransomware attacks are surfacing, targeting a number of industries. An attack on the US branch of the world's largest meat packing company, JBS, saw $11 million paid out to a hacking group. Now, EA is having source code held hostage by a hacking outfit. Naturally, cybersecurity companies like Crowdstrike stock is becoming highly sought after. Crowdstrike is a cybersecurity firm that is picking up a lot of steam among investors as a result of slew of hacks. Notably, the company is offering 3 brand new ransomware protection products to combat the epidemic of cyber attacks. In May 2021, Crowdstrike announced the results of its Q1 quarter, and the results were really good again. The revenue numbers are impressive, but unlike what a lot of investors seem to think, CrowdStrike generates a ton of cash with a free cash flow margin of 39%. It generated $117 million in free cash flow in this quarter for a total revenue of $302 million. That means a free cash flow margin of 39%. This is simply amazing. Just to compare, Amazon has a free cash flow margin of 7%, Apple 25%, Facebook and Microsoft around 30%. If CrowdStrike would retain this free cash flow margin, it would be wildly profitable. But it invests all this money back into its business. CrowdStrike is a sales machine, to the frustration of competitors like Palo Alto Networks, and with a partnership with Zscaler, the sales team is even bigger. There are a ton of opportunities left for CrowdStrike, both its total addressable market and the number of customers are expected to continue to grow fast. It can potentially grow from $36 billion now to $106 billion in 2025, about triple the size of now in just 4 years. The company guides for revenue of $318 to $324 million for the next quarter and $1.34 to $1.36 billion for the full year. That means that CrowdStrike is guiding for 63% growth in Q2. If you take the upper range of the estimate and 56% at the upper range of the year, that's a 4% raise in guidance for the year. I'm pretty confident that CrowdStrike will raise that guidance again later in the year. So it will end up at 60% growth for the current year. Revenue, gross profit, EBITDA, net income are very good for CrowdStrike. Now, value investors might tell you that you're crazy if you buy CrowdStrike, as it trades at a price to sales multiple of 53. And you know, they're right about the number, and that is a crazy high number. But with this guidance, the price to sales will be 35 at the end of this year. Still expensive, of course, but I think 50% growth for the next year wouldn't be impossible, and that would bring the PS down to 23. 40% growth the next year would bring it to 16, and so on. And don't forget that this is a company with an incredibly high free cash flow. CrowdStrike is a buy for growth investors. This is indicative in the technical review as well. If you look at the chart for CrowdStrike, it seems to have completed its first 3 waves of the Elliot wave, and the 4th corrective wave seems to be over. What that means is it is marching higher towards a target of $302, giving us a 33% upside potential in the next 3 to 4 years. Now, let's summarize both Etsy and CrowdStrike. To me, both are winners. Etsy, short term in the 1 to 2 months, I expect a 7 to 8% downside, which is a buying zone. And in the long term, I expect 160% upside potential in the next 5 to 6 years. For CrowdStrike, I would recommend buy the dip. Anytime the price drops below $225, buy that dip. It is an excellent buy zone. Long term, in the next 3 to 4 years, CrowdStrike stock should give you an upside potential of 33%. What do you think of this analysis? Please leave a comment and let me know. As always, don't forget to subscribe, hit the like button, and share this video with your friends and family. Until then, bye-bye.